As we fall deeper into the crisis, we look at the mainstream media and the government and how they are complicit and how they collude together to keep us away from the real statistics and indicators. But today we will look at the signs of a collapse increasing through 2015. You came here for the truth, so let me unveil that for you. Today we'll get into this first. The caption on the picture says, "Time to pop the champagne." That's what I talked about recently, how we can celebrate all day long because everything is just fine. The US dollar ended its strongest year since 2005. This is an article out of MarketWatch, and they are celebrating how well the US dollar and the US stock market have done. But of course, when you look at any currency, it is simply being rated against other currencies. Let's get into what they said also, that the strength in the US economy. Where is this strength coming from exactly? Well, I talked about it a few videos back, but essentially what we're looking at is increased spending on Obamacare. They found that the GDP increased by 5%. But of course, the only way that they get this number is simply by making them spend more money, not on things that they would have otherwise bought, big ticket items like houses or cars. They are actually spending more on healthcare. And that's what happens when you introduce approximately 21 new taxes on the people. It puts a stranglehold around them. Now, as I was saying about one currency versus another, they also mention here the European and Japanese central banks. Europe is talking about wanting to increase the level of QE that's going on. We've seen many different kinds of schemes that they're coming up with, the ESM and all these other ones previous to that. And this is nothing but a stimulus or quantitative easing package that happens to take place, Japan being one of the biggest culprits of that. I've gone into that a lot recently. So we'll move on here to a quite different article. In fact, this is out of the Telegraph, America's closed economy. Apparently it's a closed economy in America, though it is in fact a globalized world. So right here, this is pretty funny. Can handle a surging dollar and a fresh cycle of rising interest rates. Large parts of the world cannot. That, in a nutshell, is the story of 2015. What they're suggesting here is that the US is an unstoppable force that cannot be put down, but it's the rest of the world's problem. But regardless of that, even if this was true, the US can fall considerably if the rest of the world goes down. We see how in globalization, something that happens in one country, particularly with a supply demand fundamental issue in one country, can actually affect everything in the whole world. If there is an earthquake in Chile, we have major copper exports being affected. That affects construction throughout the whole world. And that's just one example. They also said that tightening by the US Federal Reserve will have turbocharged effects on a global financial system addicted to zero rates and dollar liquidity. They had a major introduction of quantitative easing, aka money printing, and they threw that into the economy, and then they decided to pull back. Now, since that pullback, we are seeing increased volatility in the markets worldwide. We're seeing a lot of things happening, and this is one instance here where the yields on the 2-year US Treasuries have surged to from 0.31% to 0.74% since October. This is a main, really major effect here that this has been having. When you throw all sorts of quantitative easing into the market, it's no telling where this kind of currency or debt-based instrument is going to go. It's going to pump up certain markets and bring down other markets, and there's no way to really predict what's going to happen here, except that we know eventually it all leads downhill. let's look at what it is certain to cause, and that is an increase in the amount of debt. We're looking at over $18 trillion in debt. In fact, on the last day of 2014, the debt increased by a whopping $100 billion. They must have snuck it in right there at the end of the year, tried to get it in and make it look all pretty for 2015, but we know where it's headed. This is a straight line upward, practically a straight line upward since 2007, and we know exactly where this is going. So if we get into more of this type of talk, we're looking at Obamacare. It is undoubtedly a noose around the neck of the individual citizen. Starting in 2015, companies with 100 or more workers have to provide affordable insurance to at least 70% of their employees or pay heavy fines under the employer mandate. Once again, we are seeing Obamacare with its 21 new taxes in one way or another, putting a stranglehold on the people. This is out of the Washington Times, and of course this information is everywhere, but I just wanted to get into one point here, and that is basically that individuals who may own a business, if they're a small business, they have to cut back on the amount of hours they're giving certain people, pull them down to part-time hours, because they simply cannot afford to pay them this healthcare. And many individuals are better off just taking the full-time hours than getting the healthcare. This is really skewing everything, and it is making it a real damper on the actual economy when you have individuals who cannot get the full-time hours. That's obviously very important, so they often fall back into an arena where they are unable to really make ends meet. And I've gone into those statistics before. That's something to look at. Let's get into more taxation. This goes over into Europe. Digital tax increase to take effect in Europe. This is out of the New York Times. Europe's tax showdown could be headed straight to the people's wallets. That's right. It's always like that. With the new year, a change in fiscal rules in the EU is increasing the tax on many purchases of digital content like eBooks and smartphone applications. They're just using every avenue to tax people, and it doesn't really do anything to support the real economy. Look at this. They said it's going to add up to an extra $1 billion in annual tax revenue. Of course, this never fixes the problem that they have, because the problem in the beginning is too much taxation. And I wrote about it in my book. Let's see what I said here. That I said cuts in government spending always give a boost to the economy by reducing the burden on the taxpayer. It has always worked like that. If I just go on to the first line, the Washington Post suggests that the rise in the economy was due in part to a young labor force, world-leading manufacturers, high personal saving rate, and a pent-up demand for consumer goods years after the war and depression. That's what happened previous to what we are in right now. And now all they want to do is increase the amount of taxation in one way or another. They do this through the inflation. They do it with taxation, and they use every means possible in order to take wealth from the people and spread it amongst themselves. Of course, the money always seems to go to the government, but then gets siphoned away from the government through bailouts and other schemes into the big corporations, because of course they collude together with the governments in order to do this. It's amazing to see this actually happening. When you look deeper into the intelligence here, we see that it is actually being done intentionally. It's not by mistake. And of course, this goes throughout the whole world. Chinese economy set to miss growth target for the first time since the Asian financial crisis. This article out of the Telegraph, latest manufacturing figures points to the slowest growth in world's second biggest economy for 25 years. They are extremely affected by what is happening right now because of their same policies. They use the most massive public works project I have ever read about, and they are doing so in order to keep their economy going. Their economy is still growing, however, it has come down significantly from its peak. So we'll have to see where it goes with China, and that is definitely something to look into. We move over here, another concern that I have, and not just Japan, as this article takes place in, but it is also for many countries around the world. This is out of the BBC. Concern as Japan's 2014 birth rate falls to record low. Japan's birth rate slumped to a record low in 2014. Health Ministry figures show dropping to 1 million newborns in 2014, down from 2013. So we're looking at rates here that cannot be sustained. When you have this sort of problem, the governments are really going to be overburdened. Japan's a very typical example of this, where we can see what's going to happen in the US when you can't have the new people paying in for what the older people were once doing. And this is the way this works with Social Security and all of these other programs that the older generations need as they get older, begin to retire, and the younger generations are supposed to be there to be able to pay for this, because of course there's no money in any of these funds. They need it right now. That's why they have intragovernmental debt. That's one statistic that you can look up to show you how much money they're stealing from themselves just to be able to pay for these programs such as Social Security. And we'll move on. One last article right here, something that I see happening specifically with Social Security and all of these other programs. When you tax the people too much, they go out and they riot. Anti-government protest takes place in Hungary. This is out of the AP. Now, of course, there are peaceful protests and there are aggressive protests and there are provocateur protests and all of the different things. We've seen the Arab Spring, we've seen Occupy Wall Street, and we've seen what happened with the riots in London, and all around the world we consistently see this, and we will always see this as time goes on and conditions get worse. The more of a crisis we see that we are involved in, the more riots, the more civil unrest we will see. If we see the food prices get too high, there is a guaranteed riot that will take place in that area. We will see the store shelves empty and we will see people fighting for their lives, and that's the way it has worked over the past. Historically, we can see that, and it has been documented. If you found this video informative, I would really appreciate a thumbs up, and don't forget to become an insider. The Insiders is where I give out all my best intel for free. That is available at themoneygps.com. Scroll down to the bottom, fill in your email address, and you get occasional emails from me with good, short, concise info.